Good evening, this is GBPUSD. I'm the analyst trader. You can find at the blog fibstalker.com. Also post regularly on Twitter using the fibstalker nickname. Good evening, today is Sunday, July the 21st, 2013, and this video is part of my weekly newsletter, and it's part of my series called Fibstalker View on Currencies, in which I reviewed the three majors: the pound versus the US dollar, the US dollar versus the Japanese yen, and the Australian dollar versus the US dollar. So let's start from the pound, and particularly want to start from the weekly chart. Those who follow me know that I've been showing this long-term chart, and I've been showing resistance, which we found at this 164.43, and as we can see, we saw recently at the beginning of the year we saw participation on the downside. I also want to notice, you to notice that we also have another important area of support, which actually acted as a support at the end of 2011 and again 2012 twice, beginning in mid 2012. And if we now zoom out here, we can see that this important level, the 148.48 level, was actually failed on the downside, and this generally would mean a potential continuation lower. However, we have to remember that the pound will be often, if not always, follow the dollar. So at the moment I'm expecting at least a retrace higher into a level which could be as high as this 159.26, and we will see whether this level will act as a resistance for this pair, or if it's going to, price is going to continue higher. So on the daily chart, we can see what is pushing this price higher. It's very similar to the dollar, so we have a traditional move which can be traced from the July the 10th lows here, and as you can see, we saw participation in the 150.37. Where price is headed, price can move into the 143.10, and then we could see some sort of retracement, and then if that happens, then we will trace the next move, measure move higher, and it will be traced from these from the lows at the beginning of the week, Monday week lows, the July 15 lows, and the price has the potential to continue into this 144.50 level. Moving to the Japanese US dollar versus Japanese yen. 3 weeks ago I showed you the level of where program trading and professional traders came in. That was the 93.94 level, and we know that this level, an area of support, which showed clear participation here as a target above, and the target is actually the target is above 100. Let me show you by quickly moving the scale here, where the price has the potential to go. The first target would be in this 108.30 area, and if nothing happens, that's the price we are headed. So in order to do that, we need to break this 103.72 and continue higher. But it's important to see what happened on the daily. I've also showed this to you in the last in one of the last updates I made. We have an extension long here, and we could see clear participation in the 96 97 area here, as we can see, and price went through into this 99.50 level, and then the second level 180 level, and as we can see, we saw a profiting right at this high, which means that this move is actually this price model, it's actually a valid one. But then the next extension long failed, as we can see here, and this is an important matter for me, the fact that the longs were not able to continue to support this price higher, and price moved below 99.50 gives the possibility of failure of the move, so the beginning of a move lower, and actually this will be compatible with what we expect in the dollar. So we could still see 101.40 area here, and even 102.20, which would be the second target here, but there is a possibility that we could see a reversal here. So be very careful with longs in the USDJPY. What I'll do, I would get some partial profits if you have a position from lower price at these two levels. And finally, the Australian dollar versus the US dollar. Starting from the weekly, those who follow me know that I believe this pair is in a big trouble, because there was one level of support which we used to trace from lows in 2010 to highs in 2011, and this area 0.9570 held once in end of 2011, twice mid of 2012, and look at what happened here, and I've showed this in my last review as well. The 0.92 level was pierced on the downside, which means that now this price has the potential to move at least into the all the way halfway back here, which is this 0.8540 level, and it's just a matter of how we get there. There are two possibilities. There is an important anchor on the daily that you have to keep in mind, and this is actually from previous lows in August in March this year to lows, and this would actually provide a level of resistance in the 0.9550 area here. So if we start a move higher, there is the potential for this level to act as a resistance. Another level of resistance could be just the all the way halfway back after the failure, and this would be then a higher level, and this will be actually again like the other, compatible with the weakness in the dollar. However, this 102.30 seems too far at this stage, so I don't believe that who has seen this price move lower like this will accept price high as high as 102.30. So at the beginning, if we get a reaction from here, I'm going to consider resistance in the 0.9550. That would be my first choice, and this would be a good sell here, bringing price into the 0.85, so it will be 1000 pips, which is not too bad. Now I want to show you one important thing, and why program trading and level watched by program trading are important. If we trace the first measure move lower here, after the highs, we can see that profit taking came right at those 0.8990 area, so which shows that these levels are widely watched by programs, and we should always keep them in mind. So I want to quickly show now the daily and show you where we are. Those who follow me know that I identified an anchor that Proven Trading was using in the past, has been using so far in the last, I would say, since mid of May, and this would be this first measured move with resistance in the 0.9760 area, which were pricing to the first target 0.9414. Second target was never reached, not before a retrace into the next level, which is actually traced from the same anchor. And as you can see, again, we have participation at this second level, the 0.9660, and price went into the first target. We saw some profit taking, and price is now actually continued lower, and it's now moving larger in the last 2 to 3 weeks. Now there is a possibility that we continue into this one, this 0.89 level here, 89.10 level here. If that's not the case, then I think we should carefully watch the next measured move that comes from the same high to lows, and this would be a level of resistance if 0.9617 spills on the outside. We might have a new retracement that we could then use to bring price into this 109.9550. But when that will happen, we will take note of this and we'll try to anticipate that move. At the moment, I think it's possible that price just continues lower here into the second target of this setup in the 0.9710. I hope this video is useful. I want to remind that this video is part of my FIBS Toolkit view on currencies, and it's still part of the newsletter, free newsletter. If you want to receive the free newsletter, go to my website fibstalker.com and subscribe for free. Thank you very much, and I wish you a great trading week. Bye bye.